I started my career as an engineer. So I was a mechanical engineer at Lehigh. Worked in the compound semiconductor industry for a couple of years. Lived through the internet bubble bursting. Went back, got my MBA, and really got into corporate finance. I did about 10 years in investment banking, helping small and mid cap companies raise capital, access the public markets, go public, and then joined BTCS in fall of 2013. So, quite some time ago, very early for crypto, but was, super excited about the combination of, finance and technology, having been an engineer. So that's kind of how I got my start. And, in this space, on the personal side, father of two girls, pilot, love anything that flies, whether that's, drones, airplanes, gliders, you name it. So, that's me in a nutshell.
So when you said you joined BTCS, was it already formed when you joined, or did you start it? How did that all happen?
So BTCS was started by two engineers at NASA. They basically, in the summer of 2013, realized that there was this, cool, digital money at the time, this cool technology of Bitcoin, but there was no way to spend it. So they created an e-commerce website called Bitcoin Shop. And so it was the first website where you could go buy stuff with, you want to go buy a flat screen TV, you could go buy that with Bitcoin. So I got involved really by chance. My wife was an attorney at BAE Systems, and through someone that worked for her and a couple connections, got introduced to, the founders of the time Bitcoin Shop. They had received a term sheet to go public and raise money. I was probably one of, two or three people living in Washington, D.C. at the time that understood, the micro cap space, which is basically venture capital in the public markets, and, helped them through the term sheet process. I think I increased the valuation by north of 40%, increased the total financing from around $1 million to about, just under $2 million. Basically paid for myself, and that kind of set the company off. So that was, I think it took about a month to go public. That was back in, I think we completed the transaction in early February 2014. So I was not a founder, but I was there, a couple months after founding the company.
You must be one of the first publicly traded crypto companies out there.
Yeah, we're the first public crypto company, I think, in the world, definitely in the US. I'm pretty sure in the world. So we've been around, which is both good and bad, right? I mean, we've had to deal with, 10 years of the SEC, all sorts of, other challenges as well, keeping bank accounts, et cetera. But it's been exciting, right? And we've never given up, right? 10 plus years later, we're still here, on the NASDAQ, and the business is doing great. So
10 years of battling the SEC as a crypto company. You must certainly have a lot of veteran war scars from that.
A lot, right? And it's like any startup. I mean, unfortunately, most startups fail. I forget what the statistics are. It's something over 90% of startups fail. Most in the first 5 years. So we've had a couple. We've never really pivoted away from crypto. We've primarily, since late 2014, been a blockchain infrastructure company, but we've done some pivots within that, space. But yeah, we've had a lot of challenges.
For all the people who are interested in crypto out there and thinking of, possibly taking a company public, because, there's a lot of projects out there. They say, should I issue equity or should I issue tokens? And that kind of takes you down a certain regulatory pathway. For you, that's on the publicly traded company side. How does it work? Like, does the SEC just give you ominous calls and emails sometimes saying they're watching you, or do you proactively email them or set up an in-person meeting to talk about certain issues? How does that interactions with SEC go?
It depends. So there's a lot of different ways to interact. I mean, just taking it before I kind of dig into that question, 10 years ago, there were no, I'm going to do an ICO, right? Like token offerings were, like Ethereum was one, Litecoin, but it wasn't the same. You didn't have, and there's talk of colored coins, but you didn't really have, effectively NFTs or layer twos, or, it was very early days. You're basically launching your own blockchain. It was not hey, I'm going to, I'm just going to copy someone else's open source code and launch this thing in an ICO and pump it, right? Like that didn't exist. Nor do I think that people should be doing that, right? In terms of interactions with the SEC, if you're going to sell securities, right, you have to do that either via a registration statement, registering those securities with the SEC, or an exemption from registration. And so a registration is, you basically have to put together a prospectus that tells investors everything that they need to know about the company to make an informed investment decision. And you have to do the same thing. It's usually a private placement memorandum, a PPM, for a private company, which gives them essentially the same stuff. The difference is in a public offering or offering to the public, it could be anybody and their brother, right? In a private placement, it's going to high net worth individuals that effectively have enough capital to lose. So if you want to go through the front door and get a registration statement through, which gives you access to low cost of capital, right? You need to go through the SEC, and that's a division of corporate finance. That can be a brutal process, right? If you're a biotech company that's filled with risks, and these things are a dime a dozen that work or fail. I mean, it's highly risky business. They seem to rubber stamp these things. You're a crypto company, and you get endless questions. They'll literally delay. The 10 years we've been public, I think we've probably filed more registration statements than any other public company. I haven't checked the stats on that, but I'm pretty sure. I think we're north of like 50 correspondences, which means if you file a registration statement, the SEC is going to ask you questions, you respond. They'll wait, anywhere from, in a good world, it would be, 2 weeks to 3 weeks. With us, it could be a month to 2 months. They would just drag it out and not give you answers. Then they, give you more questions to your responses. You respond. We typically turn these things in 1 to 2 weeks because the questions can be quite lengthy. You could have, a legal analysis of the how we test and why Ethereum isn't security, which we went through for years, or why we're not a 40 Act company. And so I think, just kind of summarizing this, just to be able to sell stock to the public market and get the benefits of being a public company, even if you're already public, you need to go through this process. And that, I think the first time around, it took us 1 year to get through the SEC. The next time it was about a year, just under a year and a half, which is ridiculous, right? Like literally we had to almost threaten to sue them. The last round, which we just got through a couple months ago, it took a year. They would not respond to, I literally started calling. Usually it's your lawyers that call. I started calling the staff and they'd say, we're working on it. It's this priority, blah, blah, blah. And the reality is it wasn't. It clearly wasn't. I sent them an email that basically said, you're, failing to do, fulfill your mission, the formation of capital and the protection of investors. If a public company cannot access the public markets, and the regulators, which are, funded by taxpayer dollars, are blocking, already public companies from being able to access low cost of capital, they're harming the retail investors because companies will then rely on toxic converts and other structures. So, in dealing with the SEC, this is something that's a challenge. I mean, what we ended up doing is I think this is in Q3 this year, we got low on cash. Not that we had a financial crisis. We had, tons of crypto, but we didn't want to unstake it to sell to access the capital markets. And so because they kept blocking us, every employee, officer, and director of the company raised their hand and said, hey, we'll just take equity while we work through the SEC, because they would not let us through. And that was better for our shareholders, because otherwise, we could have done a toxic pipe. I wouldn't do that. But, basically, we're protecting the SEC. We're protecting our shareholders where the SEC is failing. So that's kind of the division of corporate finance. The other division is division of enforcement. So if they think that you've done something wrong, they come after you. So they've gone after Coinbase, they've gone after Kraken. They've looked at us twice. When we went public in 2014, I had to go testify down in DC. It cost us hundreds of thousands of dollars in legal, accounting, and other fees associated with preparing and answering those questions. A year and a half later, they sent us a letter that we'd done nothing wrong and they weren't going to do anything because we hadn't done anything wrong. We've had another, our CFO, which we publicly disclosed, got subpoenaed by the SEC, had to go testify. I can't really say much more than that, except it's costing the company a lot of money. And in my mind, it's a complete waste of time. The other division, which actually this division is good. The Office of Chief Accountants is very good. We've gone to them with very complex accounting questions. They've been eager to learn, understand our business, and interpret the accounting rules and apply it. And we've had positive outcomes from those interactions. We've gone to the Crypto Hub office proactively on numerous occasions, and they wouldn't give us an answer on our business model and whether certain aspects created security or not. That's specifically around staking. So it's been apart from the Office of Chief Accountants, the Division of Corporate Finance and the Office of Enforcement have, I think treated us very unfairly, right? So everything you read in the papers, what you see Coinbase doing in terms of stand with crypto, it's all real. You look at biotech companies that get registration statements through in, a month or two, not years. So they've been actively blocking companies having access to capital.
As an aside, it's a public company that stakes. That's actually pretty cool. I don't know many of them actually do them. How does the accounting work when some of these staking mechanisms you like every couple minutes or days or whatever? How does the tax work on that?
So it differs. Like for us on the tax side, we're taxed on our net income, right? Because we're a corporation. So it's not like an individual paying tax on, hey, did I get that as earnings, right? And even as an individual, if you have that as ordinary income, you have expenses that offset that, right? So tax is less of an issue, right, for us on the crypto side.
Frequency of when it accrues doesn't really matter.
Yeah, but even if you're an individual and you're staking, right? There's been an argument. I know the IRS is going back and forth with like a couple on this that have, basically, I forget the name of the couple. They're of the mind that when you stake and you get the rewards, you don't owe tax until you sell the crypto rewards, right? The IRS is of the view, no, when you receive those rewards, that's income and that's a taxable event, right? For us as a company, it doesn't matter, right? We treat that when we receive the rewards as revenue, and then revenue drops down to net income, and you're taxed on net income. So it's kind of until we get to positive net income through our tax loss carry forward, it doesn't matter. As an individual, I mean, I don't think you should be taxed on something you haven't sold yet, right? It doesn't make any sense. And don't get me started. I could get into the tax law for phantom income tax on shares and spend an hour talking about that, but that's a different topic.
SEC, the IRS, lobbying, all these regulations, and it's great that we have an administration that's much more pro crypto supportive. With your experience, I think most people have only been through like 1 to 3 cycles, but you've been through so many as a publicly traded company. What's that like when you're talking to different government officials at the SEC or other places when every 4 years it could be massive turnover in the employees there? Or is there actually turnover in the people that regulate you? Or what is that like?
No, there is turnover. I mean, it was funny. We in a recent comment letter we got, and this is publicly available, you can go read it. Literally, they asked us the exact same question that they asked us 6 years before. And in our response was like, go look at we'd spent a year and a half answering of that year and a half, I think 9 months answering the same question, that we're not an investment company, and literally cited, I think it was 6 responses where we'd answered these questions before and then further elaborated. And I think that was probably because the staff changed over. So there's new people that ask the same questions without doing their homework. And so overall, the last 10 years it's been difficult, right? Like it's not, there aren't a lot of public companies in the space, right? Most of them are Bitcoin miners, right? Of the, I think around 30-ish US public companies, the majority of those are Bitcoin miners, and you have like Coinbase and 1 or 2 others that are in other businesses. And it's very hard, right? The disclosure is very, very hard. It's intentional. They don't want you to be public. They don't want you to sell securities to the public, so it's basically choke point 2.0, right? Like let's keep these companies from accessing the capital markets by making it difficult. And so, I mean, the reality is I don't care. I don't give up. Like, I'm like a dog with a bone. We're going to get this done no matter how long it takes, whether it takes 10 years or not. I don't care what administration's there. I do see the light at the end of the tunnel, right? In with the new administration, regardless of your political views, I think for crypto and for our shareholders, we finally have, the kind of the stars aligning. Not to say we're going to do anything we wouldn't otherwise do, but to be able to access the capital markets, not spend, time answering, frivolous questions that are not material to investors, hopefully not getting, caught up in unnecessary investigations. I think it's good, and it'll be good for adoption. I mean, us aside, if the industry does well, like, the rising tide's going to, rise all ships. So I think we're set to benefit of, if there's clarity. How long have we been waiting for? Is Ethereum a security or not?
Is Ether a commodity or a security?
Without speaking to anyone.
I know you've
token,
repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in
I'm asking about one.
The public is anticipating a profit based on the...
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law. And if there's a group of individuals...
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also...
But you have prejudged on this.
Right. Like, I don't think the SEC still have not given a definitive answer on that. Like, 10 years later. Is it a security or not? It's a simple yes or no freaking question. Like, just answer it, right?
You're not a Bitcoin miner. You're an Ethereum miner. So can you tell everyone that's listening kind of what the difference is between the two and kind of what BTCS does?
Yeah. So, it's funny. We actually started as a Bitcoin miner. So in 2014, we were the first public company to mine Bitcoin. Then I thought it was probably one of the most exciting business models that you could enter into as a public company. High revenue growth. No one was doing it. We were the only ones doing it in the public markets, and with access to capital, you could grow. I actually helped Marathon get started back in 2017 when they were a 10 million market cap. Fast forward to where we are today. We looked at it, and around the end of 2020, the Bitcoin mining space was very crowded. We had kind of had to restructure the business when we didn't survive the Bitcoin crash, and I guess it was 2015 that drove the price down 72%, and we got basically flushed out of the market. So that cycle took a beating on the company and the shareholders. And then when we looked to where we want to focus in the future, we were still interested in blockchain infrastructure, but Bitcoin mining's really it was exciting then in 2014, and it did well for companies that got in around 2017 and beyond. But now it's a crowded space where it is, it's just not a great business, right? It's highly capital intensive. Most of the Bitcoin miners are not really into actually crypto, right? They're data center operators or hydro plant operators that are, selling waste heat to, heat, homes. And so we looked at it as, the second largest blockchain, Ethereum, right? Second largest by market cap, is extremely compelling. You can do a lot more with Ethereum than you can with Bitcoin, right? Like you can build on top of it. It's both a currency and it's a decentralized computer system that you can build smart contracts on top of, which is really amazing. And it's been deflationary since the merge overall, compared to Bitcoin, which is still inflationary. And I bet it can move, right? And so when we got into it, at the end of, we had a pretty big position in Ethereum. We were basically half Ethereum, half Bitcoin, and we basically exited all our Bitcoin and went full in on Ethereum and other, proof of stake blockchains. And so with Ethereum, I think it was the end of 2020, we started staking. And so the way Ethereum works is the whole consensus mechanism is now proof of stake. So you take your capital, our capital is company capital, not, outside customer capital. We don't have any customers. You stake it to a node, you get to run that node, and then you earn rewards for running that node. And so we started that before Ethereum had even completed the merge. So I think it was a couple months after it started, early 2021. We're the first public company to do that. We run our own nodes. We don't go to a third-party provider, which actually opens up a lot of compelling opportunities for the future, which is where we're kind of growing into all on the infrastructure side. So it was a really fortuitous pivot then, and we have north of, I forget the exact number off our last Q3, but north of $30 million in crypto. We have no liabilities, no depreciating assets with machines, but we get the benefit of the majority of our assets, similar to like a micro strategy, are in crypto that could potentially appreciate, right? Which historically over time, Bitcoin and Ethereum are doing, and a lot of others have done very well. When you zoom out and you don't look at the short-term fluctuations, and we generate, revenue from running those validator nodes. So it's kind of like the best of both worlds with that you would have with Bitcoin. Yeah, we have all these assets, a lot of it, mostly Ethereum, but we're also building a revenue generating model around that and on top of it. And that really isn't possible in Bitcoin mining. And nobody else is doing this. Literally in the public markets, nobody else is doing this, which is pretty exciting. The downside of that is nobody understands what we're doing.
When it comes to your perspectives on what you do in the company as a validator and as a block builder, can you kind of distinguish between those two different things and how those work out? Are they the same? Are they different? Kind of what do they do, and how does BTCS be involved in that operation?
Yeah, so they're really two different functions, all within Ethereum's blockchain. So it can get pretty complex pretty fast, but to kind of keep it simple, validators are the ones that stake their crypto into a validator. The validator basically provides consensus to the network or proposes blocks, right? And a block would be a bunch of transactions that are queued up to get written on chain. And so that's what we started doing in 2021, which is a great business model. It's very high margin, right? If you got, your basically your input is what you stake, and that, so you have the, that crypto locked up while you run the validator, but then your revenue is all of the earned crypto, right? I wouldn't view it as like a dividend because you're doing active work to do it, to receive it. And your cost of goods sold are pretty much fixed, right? It's the allocation of some people's time to do maintenance, and it's our cost to run those on the network. So right now we're in AWS, but those are pretty much fixed costs that go into cost of goods sold. So as you stake more, your margin can go up and get extremely high. So our gross margin was like 82% in that business. So very, very high margin, but it's hard to grow without raising additional capital, right? Because you've got to stake it. Just like a Bitcoin miner is going to go out and buy $100 million worth of miners. They plug them in. Hopefully they earn more crypto than the 100 million over time. So there's return on invested capital. With us, we go out, let's say we bought, in that example, $100 million of crypto. We go stake it. We're going to get a reward. You can kind of look at that as like an APY based on that, but very high margin. So the margin would go from our 82% if we were to scale to get very high in that model. Block building is where we pivoted to a little over a year ago, which I'm most excited about, right? Because it allows for much more scalable revenue growth without the additional capital costs. And when I started talking about this and we started going into the space, no one really kind of believed us, right? People, one, they didn't understand it or didn't believe us. Two, we didn't step on the gas because we were 10 months with the SEC, the Office of Chief Accountants, trying to determine what revenue is, right? Gross versus net. We actually went all the way to appeal, went all the way to, I think, Paul Munter, the actual chief accountant at the SEC, is usually probably dealing with like JP Morgan and big companies, and, came in and had the final decision, and we won our appeal. And revenue is actually revenue. The fees you earn and the cost of sales is what you pay to, your cost of the product, right? Which was really important in making sure that we had transparent and fair disclosure so investors can actually understand our business model. That aside, it's a really interesting model, right? And we don't have our audited financials out yet. What we just put out, recently and made publicly available was that in 2014, we hit our performance milestone for management, which was 3.7 million in change in revenue, which is, close to a 200% increase year over year. And the majority of that is in the fourth quarter when we really started stepping on the gas after having, figured out that okay, revenue is revenue with the SEC, which puts us in a really unique spot in that we have, a high revenue growth business model, and that integration between the validation and the block building works really well. And I know I kind of jumped a little bit into what we're doing in terms of what the block building is. So think about what a validator does is they build consensus with the network, and then they propose blocks. So proposing a block is a bunch of transactions that people want to get on chain. Maybe if I want to send Ron some ETH, I broadcast to the network that my wallet's going to send it to your wallet. It gets in the mempool. It's a public pool, and the validator is going to pick that up and propose it for inclusion in the block. But what validators do is they actually sell the right to what's in that block and an auction to builders. And builders are a little bit smarter about, well, instead of just going in chronological order of who proposed the block first gets to go in, it's a fee-based system. So if you want your transaction on the blockchain soon and you don't want to wait 30 seconds or 5 minutes to get it validated, you'll pay a little bit more in gas fees. And so what a builder will do is they will look at the mempool and other private order flow and other sources to get transactions in bundles of transaction that have higher gas fees, that have more money, right? So if you build a better block and then you write that to the blockchain, right, because you bought the block space from the validator, your basically your revenue is all the gas fees you get, and what you pay to buy the block space in the auction is your cost of sales. And we've seen huge revenue growth in this model, and it also opens up the door to a lot of other things we can do in terms of business models, in terms of growing the amount of block space we get, how we go about doing that, the technology we implement to find the best blocks, get the best order flow. And so while we're a relatively new player in the block building market, albeit at a distant, I think we're fourth or fifth ranked right now, and it changes on a daily basis, but we've been consistently fifth for months now in terms of block builders, which is great. I mean, right now the market's dominated by two larger players, but we're the first ones to really enter the market. We're the first public company to enter this market, so it's a pretty exciting time for us.
What are you excited for in the future comes to their ecosystem? Or kind of what are your thoughts on it in this world where everyone's talking about Bitcoin and then the Bitcoin government reserve, and like there isn't much talk about the future of Ethereum. Kind of what are you excited for the project?
I think it actually creates a really unique opportunity, right? Like, there is actually a little bit more. I mean, even Michael Saylor came out recently and said he's not as opposed to Ethereum anymore, right? Like, and I think some of that could have been the regulation, right? We don't think it's going to be a security. And it's crazy the SEC, well, it's not crazy. Like, until the administration changes and we get a new commissioner, they're not going to come out and say Ethereum's not a security, right? At some point, they should come out and say it is or it isn't, right? I think we all know it isn't, but it'd be nice to actually put that, put pen to paper on that. So I think that would be a big jump. Overall, if you just forget about the regulatory landscape and look at utility, Ethereum has a lot more utility than Bitcoin. It just does, right? You can build applications on top of it. It's really hard to build on top of Bitcoin. I know there are companies trying to do it. You've got Rootstock and Stacks, and we could spend an hour talking about it. But 10 years later, I'm hearing about things that I heard about half a decade ago of solutions to be able to build, add smart contract functionality to Bitcoin's blockchain, and it still doesn't really exist in a meaningful way, right? It just wasn't designed for it. Ethereum, it was designed for it, and it's doing really well, right? Like Tether is built on Ethereum, right? It's also on other blockchains, but there's all these use cases. And so, despite not hearing as much about Ethereum, it's still the number 2 blockchain. And I think, when the floodgates open, right? If there's more ETFs, there's staking ETFs, administration changes, it creates a really unique opportunity for us as a company, being the only ones really focused on this. And we don't really compete with an ETF, right? Like an ETF, even if they add staking revenue, is not doing what we're doing. They're not block building. They're just it's a buy and hold strategy. If you want kind of growth exposure within the network, right now we're the only game in town in the public markets, which I think is pretty cool. So and I think Ethereum is going to has the potential to do really well, right? Especially under a new administration, right? Where it is still, I think it's pretty clear in everybody's mind it's not a security, but I think when that gets solidified, that could definitely help.
So it's great to hear from a mainly Ethereum-oriented publicly traded company in you, and thank you for taking the time to share with us today.
Yeah, I appreciate it. It's been great to be able to share, and I'd note we've been pretty quiet over the last year on both social media, on everything, and a function of that has really been we've been under such a microscope with the SEC that it's been what a normal company would do in terms of communication when the biggest viewer of your website is literally the SEC, it makes you pretty cautious about what you want to say when every single, word is going to be scrutinized, unfairly so, of, what you're willing to do. And we just decided to stay heads down, build the company, build the products, grow revenue, and, not say much. And so super excited for the new year.
Looking forward to it, and looking forward to more conversations to come with you. Have a great day.